Something just changed in XRP that matters more than it looks. For years, banks experimented with digital assets through small pilot programs. But according to Ripple, many institutions are now shifting towards production scale deployment. That distinction could have major implications for liquidity, stablecoins, tokenization, and the future role of XRP. In this video, we'll break down what Ripple revealed at Paris Blockchain Week, why RLUSD is growing rapidly, how institutional DeFi is expanding on the XRP ledger, and what these developments could tell us about the next phase of digital finance. See, the most important part of Ripple's latest update isn't a price target, it isn't a chart pattern, and it isn't social media speculation. It's the fact that major financial institutions appear to be changing their behavior. See, according to Ripple executives speaking recently, banks are no longer focused primarily on testing blockchain technology. They're focused on scaling it. They may sound like a small difference. It's not. A pilot program asks whether technology works. Production asks whether that technology can handle real capital, regulatory requirements, operational risk, settlement demands, and institutional scale value. Now, this is what most people miss. The transition from experimentation to deployment is often where the biggest structural changes begin. Because once institutions commit to production systems, they start investing in infrastructure, liquidity networks, custody solutions, compliance frameworks, and long-term integration. And that's exactly where Ripple appears to be positioning itself, not simply as an XRP company, but as a provider of the infrastructure layer institutions may need as digital assets move deeper into the global financial system. If you want the satellite perspective on XRP and the crypto market, not just the noise, make sure you subscribe to the channel. I break down what's actually happening in a simple way so you can understand the bigger picture. See, ladies and gentlemen, to understand Ripple's strategy, we need to zoom out. Most people think Ripple is simply an XRP company, but Ripple's current vision is far larger than that. The company wants to become a one-stop infrastructure provider for major financial institutions. Think about everything a large bank needs: custody, payments, settlement, treasury management, liquidity, trading, prime brokerage, stablecoin issuance, tokenization, compliance, risk management. See, traditionally, institutions would need multiple vendors to accomplish all of this. Ripple wants to provide a unified ecosystem. And this is where recent acquisitions become extremely important, because they reveal the long-term strategy behind the headlines. One acquisition reportedly expanded Ripple's treasury management capabilities. Another strengthened virtual account infrastructure and stablecoin payment rails. A third enhanced institutional-grade custody through advanced security architecture. And Hidden Road helped establish Ripple Prime, a growing institutional brokerage and clearing platform. See, individually, each acquisition appears significant. Collectively, they tell a bigger story. Ripple is attempting to own critical layers of digital asset infrastructure. Why? Because infrastructure is where long-term value is often created, not necessarily at the application layer, not necessarily through speculation, but through the systems that allow everything else to function. See, the companies that built railroads profited from commerce. The companies that built internet infrastructure profited from digital communication. Ripple appears focused on building infrastructure for digital finance. And that strategy could position the company differently from many crypto projects focused primarily on token appreciation. But here's where it gets interesting, ladies and gentlemen. See, institutional adoption is evolving. Several years ago, banks entering crypto primarily wanted custody. They wanted secure storage. That was the first step. Today, the conversation is expanding. Institutions increasingly want trading capabilities, settlement solutions, cross-border value movement, tokenized assets, collateralized management, yield-generating instruments, integrated treasury operations. So in other words, they're moving from passive participation towards active utilization. That evolution matters, ladies and gentlemen, because utility tends to create recurring activity, and recurring activity creates demand for infrastructure. Ripple's thesis appears straightforward. If institutions are going to expand into digital assets, they will need infrastructure capable of handling increasingly complex operations. Ripple wants to provide that infrastructure. Of course, there is one challenge that continues to overshadow nearly every conversation in digital assets. Regulation. No matter how advanced the technology becomes, large institutions require regulatory clarity. Without it, adoption remains limited. This is the single most important thing, ladies and gentlemen, to pay attention to. Write that down, let that sink in, marinate on this. This is where global fragmentation becomes a major obstacle. See, different countries continue moving at different speeds. Europe has advanced comprehensive frameworks. Japan has made notable progress. Other regions continue developing their approaches. Meanwhile, uncertainty remains in several major jurisdictions. This creates friction because financial institutions operate globally, and bank-serving customers across multiple countries cannot easily navigate dozens of conflicting frameworks. Ripple's executives have repeatedly emphasized the need for interoperability, not only between financial systems, but also between regulatory systems. And that may become one of the most defining challenges of the next decade. History offers an interesting example. In 1869, the completion of the first transcontinental railroad in the United States connected previously fragmented regions into a unified transportation network. Before that, connection moving goods across the country was slower, more expensive, and less predictable. Afterwards, commerce accelerated dramatically. The railroad itself did not create all economic activity. It enabled it. That historical event illustrates a principle still relevant today. Infrastructure matters most when it connects fragmented systems. Ripple's argument is that digital finance faces a similar challenge. Not geographic fragmentation, regulatory and technology fragmentation. And solving that problem could unlock substantial efficiencies. Now, this is what most people miss. See, institutional adoption is rarely driven by excitement. It's driven by efficiency. Banks do not adopt technology because it sounds revolutionary. They adopt technology because it saves time, reduces cost, improves liquidity, or creates new revenue opportunities. That distinction is critical. The strongest long-term adoption stories are often rooted in economics rather than enthusiasm. See, Ripple's pitch to institutions focuses heavily on efficiency, faster settlement, integrated liquidity, streamlined operations, enhanced interoperability, reduced complexity. See, whether those advantages prove decisive remains to be seen, but that is the framework institutions are evaluating. Meanwhile, the XRP ledger itself is evolving, and recent data suggests growing momentum in tokenized assets. Tokenization has become one of the most discussed themes in global finance today. See, the concept is simple. Real-world assets are represented digitally on blockchain networks. These assets can include bonds, funds, real estate interests, commodities, and other financial instruments. Supporters argue that tokenization could increase efficiency, transparency, and accessibility. But according to figures discussed during recent industry events, the XRP ledger has emerged as a significant platform for tokenized asset activity. This development is attracting attention because tokenization is increasingly viewed as one of the most realistic institutional blockchain use cases. Unlike speculative trading, tokenization addresses operational challenges that already exist within traditional finance, and institutions are paying close attention. But the real shift came when conversations moved beyond tokenization itself, because tokenized assets are only the beginning. Once assets exist on-chain, entirely new possibilities emerge. Assets can become yield-bearing. They can be used as collateral. They can participate in automated financial systems. They can interact with stablecoins and liquidity pools. This is where institutional DeFi enters the discussion. See, for years, decentralized finance was largely associated with retail experimentation. Now, major institutions are exploring versions of those same concepts, adopted for compliance, security, and regulatory requirements. Institutional DeFi may ultimately look very different from retail DeFi, but the underlying principle remains similar: programmable financial infrastructure. Another major component of the ecosystem is privacy, and this topic is often misunderstood. When people hear the phrase public blockchain, they frequently assume complete transparency. Institutions, however, have different requirements. A pension fund executing large transactions does not necessarily want competitors observing every move in real time. A corporation managing treasury operations may require confidentiality. Banks often need privacy protection while still maintaining regulatory compliance. This has led to increasingly focus on privacy-enhancing technologies. That's really important, ladies and gentlemen. Ripple and others argue that institutional adoption may depend on achieving a balance between transparency, compliance, and confidentiality. The balance could become a defining feature of next-generation financial infrastructure. Write that down. Now let's talk about RLUSD for a second, because this may be one of the most important developments in Ripple's ecosystems. Stablecoins have become foundational components of digital asset markets. They provide liquidity settlement, trading efficiency, and increasingly real-world payment functionality. According to recent figures, RLUSD has experienced rapid growth and circulating value during 2026. Growth rates of this magnitude naturally attract attention, but investors should focus on something deeper, not just the size of circulation, the role stablecoins play within financial infrastructure. Stablecoins increasingly function as digital cash within blockchain ecosystems. They serve as units of account, settlement assets, collateral instruments, and liquidity vehicles. As adoption grows, their importance expands accordingly. But here's where it gets interesting and spicy, ladies and gentlemen. Ripple describes XRP as operating behind the scenes with certain liquidity processes. End users may see stablecoin transactions. What they may not see is the infrastructure supporting settlement and liquidity management. Think of it like airport operations. Passengers see airplanes taking off and landing. They do not see every logistical process occurring behind the scenes. Fuel systems, scheduling networks, ground operations, maintenance coordination, yet those systems make everything possible. Ripple argues XRP plays a similar role in facilitating efficient movement of value. Whether that utility scales significantly remains an open question, but the concept is central to Ripple's long-term vision. See, history provides another fascinating example. In 1944, representatives from dozens of nations met at the Bretton Woods Conference. The goal was to create a framework capable of supporting international monetary cooperation after World War II. The resulting system helped establish rules, institutions, and standards that influence global finance for decades. Again, the lesson's not about identical circumstances, ladies and gentlemen. It's really not. The lesson is that major financial transitions often require shared frameworks and common infrastructure. Today's digital assets face a similar challenge, not replacing existing systems overnight, but integrating into global financial architecture in ways that institutions can trust and utilize. Now, this is what most people always miss, as far as I'm concerned. The strongest adoption signals often appear before the market fully appreciates them. Again, this is like watching paint dry on the wall, ladies and gentlemen. Not because investors are irrational, but because infrastructure developments rarely generate intermediate excitement. They don't. Building systems takes time. Integration takes time. Regulatory alignment takes time. Institutional onboarding takes time. Markets frequently focus on short-term price movements. That's why I'm always telling you to pay attention to what is quiet, because that's what institutions are doing. None of this is financial advice, just my own opinion that retains any capacity. Meanwhile, structural developments occur quietly in the background. Short-term noise, long-term structure. That distinction may be one of the most important concepts investors can understand. So, Paris Blockchain Week offered a glimpse into these structural developments. Reports from the event suggested increasing participation from institutions across Europe, Asia, the Middle East, and North America. The significance is not merely attendance. The significance is maturity. Industry discussions increasingly focus on implementation rather than possibility, execution rather than theory, deployment rather than experimentation. That evolution suggests the digital asset industry is entering a different phase. Not necessarily mainstream adoption overnight, but gradual institution integration. And that process could extend for years. See, the XRP ledger's longevity also deserves a lot of attention as far as I'm concerned. It's battle tested, and this is something that I discuss with family offices, sovereigns, and funds of funds always. It's battle tested as far as I'm concerned. Many blockchain projects are relatively young. The XRP ledger has operated for more than a decade. Institutional environments, longevity matters. It's the only thing that we look at and pay attention to. See, operational history matters. Financial institutions are generally conservative. They prefer proven systems over untested alternatives. This does not guarantee future success, but what it helps explain is why established infrastructure often receives institutional consideration. Trust accumulates over time, and institutional trust may be one of the most valuable assets any financial network can possess. Another important development involves the resolution of Ripple's long-running legal battles. For years, uncertainty surrounding regulatory disputes created hesitation among some institutions. Whether justified or not, legal uncertainty tends to discourage participation, and that uncertainty diminishes. New opportunities emerge. Projects reconsidered partnerships. Developers revisit ecosystems. Institutions reevaluate strategic options. The result is not necessarily immediate adoption, but it can create a more favorable environment for growth. And many observers believe that dynamic is already beginning to unfold. But the real shift came when interest expanded globally. See, developer activity is increasingly appearing across regions including Latin America, Australia, and other international markets. This matters because adoption rarely occurs uniformly. Innovation spreads through networks. Different regions experiment with different solutions. Successful models are replicated. Lessons are shared. Momentum builds gradually. Global adoption is rarely a single event. It is usually the accumulation of thousands of small developments occurring simultaneously. One particular intriguing area involves central banks. Ripple and the XRP ledger have participated in various proof-of-concept initiatives related to tokenization and digital value transfers. Central banks worldwide continue exploring both retail and wholesale digital currency frameworks. Some projects may succeed, others may not, but the direction of travel appears clear. Financial authorities are increasingly studying tokenized infrastructure. The ultimate outcomes remain uncertain, yet continued experimentation suggests the conversation is far from over, and investors are watching closely for future announcements. Now let's discuss market performance, because regardless of technology, adoption, and infrastructure, investors inevitably focus on price. Recent XRP market action has attracted significant attention. The asset recently tested major resistance levels while demonstrating notable momentum. Technically, analysts remain divided. Some see evidence supporting continuation, others remain cautious. This is an important reminder. Price analysis and adoption are not the same thing. A network can experience growing adoption while price remains volatile. Likewise, prices can rise rapidly without corresponding adoption. Understanding that distinction helps investors avoid oversimplification. I always say prices reacting, systems evolving. Those processes often operate on different timelines. See, current technical discussions focus heavily on key resistance and support zones. If resistance levels are reclaimed and sustained, bullish interpretations may strengthen. If momentum weakens, retracements remain possible. No outcome is guaranteed. Markets remain influenced by liquidity, sentiment, macroeconomic conditions, regulation, and countless other variables. That uncertainty is normal, and responsible analysis requires acknowledging it. See, the future remains unwritten, ladies and gentlemen. But at the same time, institutional products continue expanding. Exchange-traded funds have attracted growing interest. Fund structures increasingly provide traditional investors with exposure to digital assets through familiar investment vehicles. This trend matters because accessibility often drives participation. Many institutions prefer regulated products rather than direct asset ownership. As infrastructure improves, barriers to participation decline, and lower barriers can support broader market engagement. Another notable development involves pension and retirement-related investment exposure. See, when large asset managers begin including digital assets within approval frameworks, markets pay attention, not because allocations immediately become enormous, but because institutional approval represents a different form of validation. These organizations typically conduct extensive due diligence. Their participation signals growing confidence that digital assets deserve consideration within diversified portfolios. Again, this does not guarantee success, but it reflects changing perceptions among traditional conservative investors. Here's an analogy worth considering. The development of digital asset infrastructure today resembles the construction of medieval trade routes connecting distant cities. Merchants initially faced fragmented systems, inconsistent rules, and limited connectivity. Over time, networks expanded, standards improved, commerce accelerated. The value was not merely in individual marketplaces. This is so important, ladies and gentlemen. These analogies and examples I give, at least to me, I'll be writing them down. The value emerged from connecting them. Similarly, modern financial infrastructure may derive increasingly value from interoperability rather than isolation. And here is another analogy that I like. Think of tokenization as the transition from paper maps to GPS navigation. The distinction remains the same, but efficiency improves dramatically. Information becomes more dynamic. Process becomes more flexible. The underlying activity does not disappear. The infrastructure supporting it evolves. And that is how many institutions view tokenization, not as a replacement for finance, but as an upgrade to financial plumbing. So where does all this leave XRP, Ripple, and the broader ecosystem? The answer depends on perspective. If you focus only on daily price movements, the picture appears uncertain. If you focus on infrastructure development, institutional engagement, stablecoin growth, tokenization, regulatory progress, and global experimentation, a different picture emerges. A picture of gradual transformation, not guaranteed, not immediate, but potentially significant. The biggest takeaway is this. Ripple appears determined to position itself at the center of digital financial infrastructure through acquisitions, through institutional services, through custody, through stablecoin, through tokenization, through payments, and through interoperability. Whether that strategy ultimately succeeds remains to be unseen, but the ambition is unmistakable. So, as the digital asset industry continues maturing, investors face an important challenge, separating short-term excitement from long-term structural change, because the most important developments are not always the loudest. Sometimes they occur quietly, inside infrastructure, inside regulation, inside institutional adoption, inside systems that most people never notice. Short-term noise, long-term structure. Prices reacting, systems evolving. And according to Ripple's latest updates, the evolution may be accelerating. The coming years could reveal whether XRP, RLUSD, and the XRP ledger become central components of the next generation of financial infrastructure, or simply one chapter in a much larger story. Either way, the developments unfolding today are worth watching. If you've enjoyed this breakdown, subscribe to the channel, leave a comment with your thoughts on Ripple's institutional strategy, and let us know whether you believe the future of finance will be built on public blockchain infrastructure. As always, ladies and gentlemen, thank you for watching, and I'll see you in the next one. Hope everyone's having a great afternoon. What a time to be alive. I want to welcome all the new members of our Patreon, the Crypto Public Desk Monthly, all the new members of the membership channel. If you look at what's happening right now in the markets, it tells a tale. Ladies and gentlemen, if you are looking to learn how to trade, if you are looking to learn how to invest, come and join the Crypto Public Desk Monthly and join over 585 active traders and investors who are seasoned traders and investors, brand new investors and traders who really want to take control of their own financial situation and learn what I was taught on the floor of the New York Mercantile Exchange. And if you're looking for the deeper macro research, come and join us. Because look, it shouldn't have to be that the only ones who take advantage of the chaos are institutions. That was the biggest thing I learned on the floor of the Mercantile Exchange when I began my journey as a financial mercenary. It was drilled into my head that an individual should be able to take advantage like a bank. The only thing that's separating them was tradecraft and knowledge. So, as always, I tell you this all the time. One good tip from the pits can easily pay for your entire year subscription. So, if you look at the noise in the market right now, it's staggering. In 24 hours, we see price movements change, and a lot of people are getting cut up like sushi. At the time of this recording, oil is around $75. It's trading between 75, 60, and 77 handle. I like to sit there and say this. That's a big thing to understand because that's going to affect a lot of things. See, I'm in the camp where, and none of this is financial advice, it's just my own opinion, and it retains myself and our organization in any capacity. The world's in flux right now. Phone was going off during the video. One of the biggest things to pay attention to is this. I told you about having a recce, having your own personal trading plan. Do you have weekly goals, monthly goals, quarterly goals, yearly goals? I tell you to write those down. I tell you to put motivation in front of you so you can see what you're doing this for. It could be a picture of your family, your kids, a villa you want to buy, a boat you want, that car you want, that trip you want, that grounds you out, why you're doing this. Because make no bones about this, trading is an occupation, ladies and gentlemen, it's a profession. How I'm viewing this right now, let's get back to 1 + 1 is 2. I'm going to take the PhD out of PhD here right now. What you got to pay attention to right now is you want the market to only focus on one psycho catalyst at a time. When there's too many psycho catalysts going at once, that's how people getting cut up like sushi, and that's when things totally don't make sense. So the catalyst that we wanted to go back to is just about interest rates, that narrative. If oil is crashing, okay, that takes another narrative away. The markets can only focus now back on the narrative of inflation and the destruction that's going to happen in certain industries, because it's not enough for oil to fall like this. Inventories have to be built back up. Talk to people who are living in Asia, what they're getting right now with energy. Has it gotten back? You know, that's what you got to pay attention to. And all the tips from the pits that we put out on sulfur, nickel, okay, urea, copper, all of these things, it's very, very big. Plastics. I go over all these things, right? But that's very, very important. So as we watch the DXY and the overall views in the market, to me, I'm in the camp again that I don't think there's going to be much big follow through for gold right now. I don't think it's going to go much higher right here. Again, we're short-term bearish, long-term bullish. I told you that. And I keep telling you this is why, because the AI situation is not ending anytime soon. That's going to suck up commodities. So when you look at everything, again, risk on, risk off. The NASDAQ is not moving so hot. Cryptos won't be moving so hot. Write that down. None of this is financial advice, just my own opinion. I discuss here in the little bit of time that I get with you guys and ladies about how we see things and why. Inside the Crypto Republic Desk Monthly and our Patreon, we go over how to take advantage of these situations. And it's true, because if you're new at this, and it's okay, I would want to learn how to trade and I would want to learn how to invest. You can do both of them at the same time, and you're supposed to be doing both of them at the same time. This is not financial advice, just my own opinion. By doing them at the same time, you have positions that you're keeping for your retirement. That could be in a 401k, self-directed IRA, a Roth, again. And you have things that you are trading for yourself. That could be in a personal trading account that you're taking advantage of. Forex, futures, cryptos, what you like. So you're doing two things at once. The chaos that's caused by the powers that be helps take advantage of price swings. Low leverage. Your position size has to be very small so it can be cut, carried to, added to. And what Jesse Livermore said, you got to be able to outlast the market. The new person thinks that the more I risk, the quicker I get rich. They get cut up like sushi. That's not going to work very, very well. I keep telling you, XRP, ICP, HBAR, all day, every day. We believe the Clarity Act gets done. I'm not looking at 2030 or 2031. I'm not looking at things like that. I look at blockchain. I was saying this to somebody before making this video right here, right now. A client, a very powerful family office. See, we work for the family offices and the families. So funny. Again, all I know is finance. I'm going to get back to answering everyone's comments. I was away again. I got to get back to that. I'm going to make that video. Someone gave a comment. They want me to look at some YouTube channel and see what they're talking about, throwing haterade on XRP. We'll take a look at that. But ladies and gentlemen, I look at this as financial war. I'm not looking at this like other. I tell you this all the time. We're not crypto influencers, ladies and gentlemen. We're financial mercenaries. That's it. I want movement in asset prices, and I want to be able to take advantage of that. I don't care who wins sports games. I don't really care. It doesn't put food on my table or digits in my bank account unless you're gambling, and I don't gamble on sports. I don't do that. Again, the world is changing. We believe the Clarity Act gets done. We believe what's happening financially is the future. Blockchain to me is no different. This is what I was saying to this family office and the family, like a physical resource concession, whether that's fossil fuels, metals, or we're growing food. to us, there's certain blockchains and cryptos that are going to be used in the future. That's the key here. You're doing this for your future. You got your bag that you're holding on to for future appreciation, and you got what you're trading. That's it. We don't believe in leverage. Ladies and gentlemen, I love you all. I'll see you on the front lines. Again, if you want to learn how to trade and invest, come and join the Crypto Public Desk Monthly. It doesn't matter where you are in your investing and trading journey. We have people who have just started, people who are seasoned veterans. Information is free, ladies and gentlemen. It's how you apply it that matters. Because now that the narratives, and if you're watching these videos, you'll make it to the end, right? And you're writing down some of the things I say, you're really further ahead from most people. None of this is financial advice. It's just my own opinion. As always, this content is for informational, educational purpose only. This is not financial advice. Never invest based solely on a YouTube video. Always consult your licensed financial personnel who works for your family. But again, it really doesn't matter what happens if you have no skin in the game. So with that being said, ladies and gentlemen, I wish you a blessed day. I love you all. Don't get caught up like sushi. Remember, death by 1,000 headlines. There's a lot of buy the rumor, sell the fact going on. We're still in the middle of summer. A lot of people are away. So get that Gucci conviction, that Gucci clarity. We're walking up this frosty mountain. I'm with you, drinking my frosty beverage. I didn't make up these lines, ladies and gentlemen. They were taught to me from the floor of the New York Mercantile Exchange. Some of them I did craft from things I heard, right? But again, this Gucci conviction, Gucci clarity, I've never been more excited, because to risk it all, which is your reputation, is something I thrive on. See, I thrive in the chaos. No different when I was thriving in the pit, screaming and yelling, going in one pit, now another pit, going between the floors. This is something I don't expect most people to understand. I expect most people to get cut up like sushi. I do. But then again, you'll make a living by what you make, a life by what you give to other people. I love you all. See you in the front lines.